The Figma and Bullish IPOs exploded into the public markets. It's no surprise with markets at all-time highs in an IPO drought since late 2021. Retail IPO Access has been strong, and I'll share my recent IPO allocations for both deals and some trends I'm seeing for retail IPO investors. In IPO Radar news, two of the most anticipated 2025 IPOs are back on track. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of Access IPOs. It's good to be back. I've been on a break for 3 weeks, traveling with my family. In fact, I haven't recorded in probably about a month. I had some pre-recorded episodes published while I was gone. And while I was gone, two explosive IPOs. Figma had its IPO on July 31st, and Bullish had its IPO on August 13th. That's yesterday. I'm recording this Thursday, the 14th. And retail IPO Access was pretty good for the Figma IPO and excellent for the Bullish IPO. One of the best we've ever seen, probably the best we've ever seen. About 20% of IPO shares went to retail IPO investors, and that's unprecedented. Why did that happen? Well, I'll dig into that a little bit more later in the podcast. I'm going to share my IPO allocations for both Figma and Bullish and talk about what I'm seeing mostly in the Access Club community, where we have several investors who are indicating interest for these deals and then sharing the allocations they're getting. I'm also seeing some trends on Twitter from mostly frustrated investors who are not getting share allocations. And I think this comes back to the flipping policies. People are flipping their shares the day of the IPO for a quick profit and then realizing at the next IPO that that's going to hurt their chances of getting shares for future deals. The brokers are clearly punishing flippers. So if you're getting one share in these Robinhood deals or one share in these SoFi deals, it's probably because you're either new to IPO investing or you've been flipping shares, you flipped a previous deal. And so to fix that problem, you just have to follow the policy. And yeah, you might have to not sell when stock spikes on the first day. But if you want long-term access to IPO deals, that's what you have to do. You have to follow the flipping policies. All right, so I was on vacation with my family in England and Scotland. I'm screen sharing a map of where we traveled. And I had these visions of me being able to work a lot of hours while I was traveling with my family, especially on long train rides and in the mornings and in the evenings. Unfortunately, we had a lot of travel disruptions with our train travel. There was an electricity outage north of London when we were trying to get to Edinburgh. There was a massive storm that hit Edinburgh, so we had to change our plans a little bit, headed back down south into York. So the train travel was just more stressful than usual. It wasn't as comfortable. There was a lot of overcrowding because these trains were canceled. So I didn't get to work on the trains very much. And I did work a little bit in the mornings and a little bit in the evenings. But honestly, traveling with 3 kids, my kids are 10, 11, and 13. It's just really taxing on your brain. We were not on a tour or anything. We were just booking things on our own, staying in Airbnbs. And we have a lot of special needs when it comes to eating. So that was just really stressful, finding places to eat and getting the kids to not complain about whatever we were doing or getting them away from the things that they really enjoyed doing. So it was a great trip overall. And I was following what was happening in the IPO markets. And with the pre-IPO news, I just wasn't on top of it as much as I usually am. I will be going forward for the rest of the year. But travel like this is why I run the kind of business I do and why I saved all my money for years so that I could buy some flexibility in my lifestyle. I love to travel with my family and I love IPOs. So I was able to do both. Call it a working vacation, but for the most part, I was tending to my family and we were off doing fun things. So the timing wasn't perfect, especially on the Figma IPO and the Bullish IPO for that matter. I wasn't sitting at my computer when those were starting to trade, but the outcomes were pretty good and I had decent internet access. So while Figma was trying to open the stock and people were waiting for that thing to open, I was hiking in Scotland on the Isle of Skye in a place called Point Nest, and I'm sharing a video of what I was looking at as I was also trying to look at my phone, getting that sliver of phone service to just figure out what the price was, what the opening price was. I couldn't figure it out. But I eventually got a little bit of internet service and was able to see what the price is. And the price was astonishing to see an IPO up 250% on the first day of trading. That's abnormal, and we should not be expecting those kinds of returns. Circle had some crazy returns, explosive returns just a few weeks ago, a few months ago. And then Bullish yesterday was pretty wild as well, up more than 100%. And that shouldn't be happening. But I think the markets are just starved for these new companies. Everyone's tired of the Mag 7. The Mag 7's at all-time highs in terms of the top 7 companies and how much of the S&P 500 they make up. People want these new companies and they want to invest in these new technologies like crypto, certain fintechs, certainly AI. And those kinds of companies just don't exist in the public markets. And so when they IPO, these first ones to IPO are getting a lot of attention, and they should, because these are growth opportunities. These are growth industries. So you might be thinking, wow, you're hiking in Scotland. It's kind of sad that you were looking at your phone with these gorgeous views of the Scottish coast. And fact is, I love IPOs. I love the excitement of an opening trade, but it wasn't a big deal looking down at my phone to try to get a price and getting text messages from friends who are also investing in the deal. So just want to recap this Figma IPO first, because it was a pretty extraordinary deal. The final IPO price was $33 a share. The opening trade was $85 a share. That's quite a pop. Of course, you don't want to sell there, because if you sell there, then you are a flipper. But the first day, the thing traded all the way up to $115 a share. That was the closing price for a first day gain of 250%. And that's wild, right? And so if you were able to get in at that IPO price, the 33, then you had a one-day gain of 250%. Now, I've held some stocks for 30 years that I haven't had a 250% gain on. And so this is why I invest in IPOs. It's a speculative investment, but the underwriters underprice these deals so that you get that one-day pop. And usually they want it to be more reasonable, somewhere in that 20 to 30% range. But there's some interesting dynamics happening right now with this lack of companies in the public markets, new companies in the public markets. You have stocks at all-time highs. You have anticipation that the Fed's going to lower rates. You have some of the international conflict sort of quiet right now. So there's a bull market raging right now, and now's a great time to IPO. We've been saying that for a while now, but companies have had their opportunities to get their ducks in a row to IPO, and Figma is one of them. So this deal raised about $1.2 billion and an IPO valuation of $18.5 billion. And today it's trading down at $78 a share, so it's come down quite a bit, but it's still up more than 100%, 136% right now from its IPO price. Now, I got into this deal two places, at Robinhood and SoFi. Robinhood, I requested, I think, 100 shares, and I ended up getting 19 shares, which about 20%, 19% allocation there, which is pretty good for Robinhood. I saw plenty of investors who got one share or maybe 0 shares. Most people usually get about a share. And I know one investor who got more than 200 shares. Now, he made a really large request, but Robinhood is willing to give you shares. Now, there's something going on in the background. They say that IPO Access is random, but it's clearly not, because I've seen people on Twitter saying they requested thousands of shares and just got one. Or you might have someone that requested 2 shares and got 0. But it seems like new investors who request shares at these platforms are getting a small number of shares. And then once they validate that they're not flippers by holding the shares for the entire flipping policy, they're being rewarded. I have never flipped shares outside of the flipping policy at Robinhood, and therefore I'm getting pretty good allocations from there. 100 shares wasn't a huge ask. I think I may start bumping that up a little bit, because if I'm getting 20%, I could increase that number that I'm requesting and just get more shares. And especially for the high profile deals that we know are going to pop, or we're very confident are going to pop, those are the deals I really want to get more shares for. SoFi was a little disappointing for this IPO, the Figma IPO. I requested 150 shares. I only got 3. And it seems like SoFi just didn't get a lot of shares for the Figma IPO. Actually, a lot of the brokers didn't get a lot of shares because it was a high demand deal. Even at a $20 billion valuation, there was institutional demand that was really itching to grab shares of this company. And it was probably more of a traditional IPO in that retail got a small number, maybe 5%. And then we all got our sliver of that piece. So 22 shares for me, not bad. Only about a $1,000 profit right now. And I haven't locked that in, of course, because I'm waiting for the flipping policy to finish up. So with that deal being on July 31st, I'm going to wait until about August 31st to sell my shares of Figma. If I sell them, I may actually hold on to some of these shares because I do like this company and what they're doing over the long term, but valuation is still pretty high. About those flipping policies, Robinhood and SoFi are 30 days. So you have to wait for those 30 days. TradeStation, Webull, and Moomoo don't have a stated flipping policy. Now, that doesn't mean go and flip your shares the moment they start trading on those platforms. I do think that they're maybe going to consider that in the future, or they're tracking it in the background. They just haven't really acted on it yet. There's a bit less demand on those platforms if you get shares there. Fidelity's is 15 days. So if you can get shares of Fidelity, you have a little more flexibility on that flipping policy. SoFi also charges a fee if you sell within 120 days. So definitely read those flipping policies if you're dabbling in these deals. And if you want access to future deals, don't flip. It's that simple. They're telling you what the rules are, you follow the rules, and you're going to get more shares in the future. And the rules are that you may flip. And maybe they're doing that to tempt investors to flip so that then on the next deal, someone else can get access to the deal. That would actually be pretty smart and a pretty good idea. But if you follow those rules, then you can get future access to deals. And I do think it might increase your chances the more reliable you are as a non-flipper. I saw a lot of people on Twitter who were upset with Robinhood over this. And I'm willing to bet that they were either first-timers or former flippers. So if you flip, don't expect shares for the next deal. Follow their policy to increase your chances of getting future access to deal. And yeah, you might lose out on some profits. That's just part of the game. Now, Circle, I waited those 15 days and the stock luckily kept going up. So I was able to lock in some profits near the all-time high. So pretty grateful for the flipping policy in that scenario. But each deal is different, so mind that flipping policy for future access. Let's move on to the Bullish IPO. August 13th, that was a Wednesday. As the Bullish IPO was starting to trade, I was on a flight from London back to Washington, D.C., and I was watching this show on the TV screen. It was The White Lotus, if you've watched that on HBO. I was watching season 3 of The White Lotus, and I was binging this show, and I was thinking, wow, like, should I stop watching this, get on the Wi-Fi and follow what's happening for the Bullish IPO, or should I just enjoy the last few hours of my vacation away from the computer, watch the White Lotus, and deal with whatever was going on with the Bullish IPO when I got off the plane? And that's what I chose to do. I didn't end up getting the Wi-Fi. I just watched the TV show, ate the food, talked to my kids. And when I got off into customs, that's when I was texting people and trying to figure out what was going on with the price. My flight landed around 3 o'clock, so it had been trading for about 2 hours. But I was happy to see what my allocations were. And I'll share my allocations in a second. And I have to say they're much better than the Figma IPO. So the Bullish IPO, $30 million offering. The CEO, his name's Tom Farley. I guess he's the former chairman of the NYSE, and hence this stock listing on the NYSE versus the NASDAQ. And it's also probably a motivator that made him want to take this company public. He's very familiar with public companies and knows the prestige of the NYSE and knows what it can do for liquidity and raising capital. But this guy, Tom Farley, goes on CNBC and he breaks some news that 6 million of the 30 million shares that were offered in this deal went to retail investors, and that's 20%, which is really unprecedented. And leading up to this IPO, after the terms came out, I was shocked to just see all these different companies offering IPO shares on their platform. Robinhood and SoFi get a lot of volume. Fidelity gets a lot of volume, but I started seeing deals on TradeStation, which has a partnership with Click Markets to get IPO shares. Click Markets isn't a broker, but it works with other brokers. It also works with Webull. So Webull was offering shares. And then one of the Access Club members said, hey, Moomoo is offering shares. Now, Moomoo is another one of these mobile-first brokers that says they have IPO access, but really hadn't had any U.S. deals that I had seen, or at least not any meaningful ones. I know they have some Singapore and Hong Kong deals, but when I learned about Moomoo, I had an account there and put in an order for IPO shares of the Bullish IPO at Moomoo. And so all of these brokers were offering shares, and I thought that maybe Bullish was thinking that crypto investors like to buy and hold, the HODL thing that they talk about. And so they're trying to get as many of these shares into retail investors for that reason. But what I learned in this Tom Farley interview is he wanted to go against the status quo. And the status quo is to let the Wall Street banks give all the shares to their wealthiest clients and let retail maybe get some scraps. But he feels that retail investors are more sophisticated and are pretty good market makers in terms of buying and selling and providing liquidity to the market. And that's what we've been saying for years, that more shares should go to retail investors because we are more likely to buy and hold. And it's better to spread the wealth and just give all the wealth to the people who are already wealthy. So by my calculations, there were 6 retail online brokers that offered access to this deal. ETRADE was the only one that didn't, and I think that's because ETRADE is owned by Morgan Stanley. Morgan Stanley runs a lot of these IPO deals, and they're pretty stingy about shares. So I felt like with JP Morgan running this deal, they wanted to do what they wanted to do instead of just dealing with Morgan Stanley. So they left ETRADE out. And so the brokers that got access were Fidelity, Webull, Robinhood, SoFi, Moomoo, and TradeStation. Now I put in indications of interest at 4 of these brokers and got shares from all 4, which is definitely a first. The big one was Fidelity. I requested 600 shares from Fidelity, and I received 300 shares of Bullish stock from Fidelity. That was a record breaker for me. I requested 125 from Robinhood. I got 22. I requested about 30 from Webull. I think it was about $1,200. Ended up getting 10 from Webull. And I only had $100 at my Moomoo brokerage account, and so I requested as much as I could, and I got 2 shares from Moomoo. So I was very pleased to get all of these shares. And I didn't know about it until I got off that plane. And I was struggling to get my phone to start working again, but it was good news all around. For those of you watching the deal, it took until about 1 o'clock, which is about typical for these high profile deals. It opened at 90, went as high as $118 a share in that first day of trading. Today, Thursday, it's around $73 a share. So it's only about a double right now, which 2-day return of 100%. Not too shabby. So I now have 300 shares of Bullish, and in 15 days or so, I have the option to sell them. I could sell them today if I wanted to, but then I'd be punished by Fidelity, and their IPO flipping policy is very clear. If you sell within 15 days, you're going to be punished. So I'm going to hold my shares because I want to invest in future IPOs at Fidelity. But it's really cool to see an $11,000 gain in my brokerage account, especially as I was waiting in customs to try to get back into the country. It was a huge line. It was hot. Everyone was miserable. And I'm showing my wife, hey, check out this trade. We made $11,000, which is not quite what the trip cost. It's in an IRA, so it's not as, you don't feel it as much as if it were in a taxable account. So it's in an IRA, and I do most of my IPO trading there because that's where more of my assets are. But it felt pretty good to come back from a very expensive vacation and then earning a decent chunk of money to help offset a pretty big chunk of the vacation costs. If that's the way you want to think about it, it's sometimes how I think about it. But in an IRA, it's not quite the same. I did not invest at SoFi this time around. And from what I'm hearing from Access Club members, SoFi was delivering a pretty good number of shares to people who requested them. The reason I didn't request them from SoFi is that I was already doing it at 4 different brokers. I had transferred a bunch of money for the Figma IPO. It didn't really come through, so I was a little less optimistic about SoFi, and I just didn't feel like transferring all the money again while I was already transferring money to Robinhood and elsewhere. And I already had my money in the retirement account at Fidelity. I knew I was going to make a pretty big request at Fidelity, so I just thought I'd sit out of SoFi this time around. I did hear a handful of readers who received a nice chunk of shares from SoFi. They're abiding by that flipping policy now. So good to hear that all these brokers filled shares for this Bullish deal. And it was really cool to hear that CEO talk about how he believes that retail is sophisticated and should be participating in more of these IPOs. Man, I would love to see 20% allocation to retail investors become the new standard. Maybe at the NYSE, maybe he can influence people at the NYSE. But I'd love to see things going in that direction. 5% is just not enough. 20%, nice round number. Institutional investors can still get their piece. Wealth managers can still reward their clients as well. But I think we can all agree that seeing these explosive IPO returns is kind of unhealthy overall. It's not sustainable. And the IPO process is still broken. It just was never right. It's never transparent. There are companies working on a solution to making it more fair for more people and allowing the issuers to raise more money and not leaving money on the table. The way that things work now with the investment bankers running these deals, we're just trying to play the game how the rules are set as they are now, and we have no influence on how things can be improved in the future. So if we can profit, if retail investors can profit from these deals, let's do it. Let's follow the rules and try to get access to as many deals as possible and do the things to prepare that we talked about in episode 22, I think it was, for IPO investing tips. Prepare for these IPOs by doing the things I lay out in that episode so that you're ready when the next IPO hits the market and there's an opportunity to profit. Let's move on to IPO Radar news. This is when I talk about the various news that's happening in the universe of these pre-IPO companies that I've identified as potentially going public in the next 6 to 24 months or longer. These are companies that retail investors want to own but can't own for the most part. I mean, you might be able to buy some of them pre-IPO, and we talk about how to do that sometimes on this podcast. I follow the news from various sources to understand what's going on with these companies, but the main thing we're looking for is signs that the companies are moving toward their IPOs. Now, I'm kind of getting tired of a lot of the pre-IPO news out there. It's really dominated by these AI valuations that are out of control. OpenAI is at $500 billion now or something. This nonsense with companies like Perplexity that are just doing things to try to get media attention. You've got feuds between billionaires over these petty little things in the AI world or the talent competition world. So I'm really getting tired of a lot of the news out there. And maybe it's just a slow news month now in August. I have been keeping on top of things, but not a lot of interesting stories have come down the line while I was on vacation. I thought maybe, I'm on vacation, I'm not seeing as much, but no, I've reviewed the news, there's just not a lot happening. But there were two very important news stories that got me really excited in the last few weeks. And these articles are about two of the companies who are at the very top of our upcoming IPOs list, have been for quite a long time now. And that's StubHub and Klarna. So I'm going to focus on those two stories for this IPO Radar News session. And then next week, I may focus more on these, or in the coming weeks, I'll probably return to these two companies again. But I want to highlight these articles that came out. First one came out on July 31st. So good timing there. It was during the Figma IPO and all that euphoria. This came out at 8 in the morning on July 31st. It was from a group of reporters at Bloomberg, including Anthony Hughes, who is someone I've followed for some time. And the article says that Klarna is considering reviving its potential New York initial public offering as soon as September, said people familiar with the matter, following a recent surge in fintech prices and strong debuts of U.S. listings. Klarna declined to comment. Yeah, Klarna had their opportunity to go public. I mean, they were really moving toward doing it in March until that tariff announcement by the president. Stocks tanked. Stocks have recovered, and other companies that went public after that tariff announcement did just fine. Chime, eToro, their IPOs were successful. They haven't been performing as well as they probably would like to have performed. Chime's only up about 10% or so. eToro's down about 10%. So these were somewhat unexciting companies, though, but they did brave the market and IPO after that tariff announcement. So the markets have definitely been receptive to IPOs, and it's just got stronger and stronger, especially seeing Circle and the CoreWeave performance after its IPO. So the markets are ready for these IPOs, but for whatever reason, Klarna decided to push theirs off. Now, according to this article, so deliberations are ongoing. There's no final decision. They always say that. But if it is reviving this IPO in September, that could mean that we get the S1 filing any day now in August for a September IPO. Klarna has already released its S1 filing, or F1 filing in this case. It's a foreign company. So they'll need to update the filing itself with just new numbers from the latest quarter so that it's up to date and ready to go. And I'm willing to bet its accountants are working on that right now. So we'll get that updated filing likely first, and then we'll see the updated terms. And when the terms come out, you usually have about 10 days or so, or 7 to 10 days between when the terms are released. That includes the offering, the price range, and then it goes into the IPO roadshow. And that day when that filing is released, that's when usually we get a chance to invest in these deals at the various brokers. Klarna has not released that yet to the public, but we could see it any day. Or if they wait until Labor Day or so, which would be September 1st, that first week of September, they could potentially get that IPO out the door by the end of September or in early October. And that would be just fine with me. Klarna deal could launch us into the fall, and maybe it might trigger a few more filings to follow through by the end of the year. So Klarna is now number 2 on the upcoming IPOs list, behind number 1, and that's StubHub. Article came out on August 11th, and I believe this was a CNBC news story, breaking news story versus a scoop from a reporter. And I actually noticed that StubHub filed an amended S1. It showed up in my S1 feed. If you go to my website, there's a S1 filing feed. So that showed up there, but I didn't see any terms added. And I was communicating with one of our Access Club members about it. And I was saying, oh, well, they just have to do this to keep it active. If any of you followed the Turo IPO, they maintained their S1 filing with amended quarterly updates for almost 2 years. And so I thought this might have been just StubHub updating those numbers, the quarterly numbers, so that they could keep it ready for the IPO. Until this CNBC article came out, or it was probably reported on the TV. I don't really watch the TV anymore. So it says here, StubHub updated its IPO prospectus on Monday, effectively restarting the process to go public. The online ticketing company expects to kick off its IPO roadshow after Labor Day and make its public debut in late September, which seems to align with what Klarna is doing, but StubHub is a step ahead because they've updated this S1 filing. And this article says, hey, they're doing this after Labor Day. You're going to see the amended version with the terms, and you're going to see the IPO roadshow. So after Labor Day, who knows what that means? It could be that week. It could be the week after. But chances are they want to get this thing out the door as soon as they can. We've watched StubHub cancel their plans in 2024. They canceled them again on April 2nd this year with the tariff announcement. They were kind of spooked by that. And then there was an article in, I think, May of 25 with the CEO getting out there and saying, hey, this is why we're doing this. My investment banker said you shouldn't IPO during this tariff announcement, pull it back. And essentially he was saying like, hey, we're going to do this. Here's why we're not doing it, because he's been a little wishy-washy with backing out last year when last year would have been a perfectly good time to IPO. So StubHub seems to be ready to move forward. Klarna is probably also ready to move forward. It's just a matter of time to know which one's going to do it first, or if they're going to try to not do them at the same time. Goldman Sachs is running the Klarna deal with help from JP Morgan and Morgan Stanley. The StubHub deal is JP Morgan and Goldman Sachs. So I'm willing to bet that these underwriters are going to talk to each other about when they're going to launch these, and they're going to try to avoid launching them the same week so that each one can have their moment of shine on the NYSE. They're both New York Stock Exchange IPOs, and they got to put the banner on the outside of the NYSE building, and they got to go up there and ring the bell. So with the same underwriters being part of both deals, they're probably going to make these two deals about a week apart, is my guess, maybe a couple days. And from the looks of things now, StubHub looks to be first, and that's why I have it number one on the upcoming IPOs page. After that, things starting to slow down a little bit. So we'd like to start hearing some more news, which may not come until after Labor Day. Or you might have some companies who are going to announce some things in this last 2 weeks of August. A company I haven't talked about here in a while on this podcast is Cerebras. Cerebras looks to be delaying its IPO or postponing its IPO. It's raising a private funding round of about $1 billion. And so Cerebras has been on this list of upcoming IPOs for some time now, and it's now looking more unlikely. I haven't learned a reason why. We just got some reporting on it. So without Cerebras in the pipeline anymore, we have to look to the next companies. And the big one that I think is most likely to go public this year is Gemini. Gemini is another crypto exchange company, and they've filed confidentially. They've said they're going to move forward. The Winklevoss twins are very opportunistic guys, and they see what's happening with Bullish. They see what's happening with Circle. I think there's a pretty good chance that that's going to be the next company in line after StubHub and Klarna. After that, it starts to get a little bit fuzzy. We've got Navan, Navan. It's a travel and expense management company. Netscope has been talking about it for a while. I haven't heard any news anytime recently. Medline, Genesis. So there's this group of other companies who are supposedly in the pipeline, and it's been very quiet. So we're waiting for those announcements of confidential filings or S1 filings to hit the SEC website, or amended S1 filings, or some sort of leak that we can get from the press. Discord is another one that could go public this year, Airtable. If you go to episode 17, I did a podcast on upcoming IPOs for the second half of 2025. Those are the ones we should be focusing on now until we get more reporting or leaks or scoops from reporters telling us what else is coming into the pipeline. Right now, all eyes are on StubHub and Klarna. And that's why I highlighted them today in our IPO Radar news. After that, we'll see. But right now, if you're a startup and you're thinking about going public and you haven't started making those moves, wow, it's really time to make those moves while this market's raging and while public investors really want a piece of these new companies hitting the public markets. That's all for the show today. If you like what you're seeing here, please tap that star and hit a 5-star review wherever you consume your podcasts. If you're on YouTube, give it a like and a follow. And check out the links in the description for ways to sign up for my newsletter. If you want to take your investing to the next level for IPOs, join the Access Club. It's on Patreon. Go to patreon.com/accessipos. And that's where we talk about various allocations and IPOs that are upcoming. We've got a separate chat now for every upcoming IPO. So if you're only interested in StubHub, then we've got a little chat about StubHub. If you want to see what was happening in the Bullish IPO, it's all there. So join the Access Club. It's only $5 for the baseline membership level. If you're interested in all these brokers that are offering IPO access, I've got a page on my website. It's called Best Brokers. Just go up to the menu and look for brokers, and you can see which online brokers offer IPO access to its customers. I've got descriptions of eligibility there and some information on the flipping policy. So go to accessipos.com, look for the brokers link in the menu, and you learn more about those companies and sign up for an account using one of my links. If you do that, I get a small commission from those companies that helps the website That helps me build this business and create this content online for you to consume, mostly all for free. Thanks for supporting independent publishing like this podcast and my website. And I'll see you next week with a brand new episode. Hopefully I'll be fully recovered and back up to full speed with IPO Radar news and the latest happenings. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.